Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, this is Shiraz Mian with the Zacks Top Stocks video. Joining me this time will be Benjamin Rains. Ben and I each have picked a stock for today. My stock is a fintech player that you likely haven't heard of. It's called Broadridge Financial, ticker BR. It's a 21 billion market cap operator that is likely as dominant in what it does as Google is in online search. And what it does is it manages the public company proxy voting system. Now, that's a mouthful, and that's something most of us in the investment world don't really think a whole lot about. And that's something that Broadridge has mastered. It owns about 50% of that market. It also is a huge player in processing trades for brokers, broker-dealers, and money managers. The daily count, last I checked, was north of $9 trillion. So a huge player in an unglamorous, boring part of the financial world. And I'm not pitching Broadridge as the next Tesla or the next Square. I'm pitching it as a stock that could play the anchoring role in your portfolio. Gives you some exposure to the broad finance field, but not in a traditional sense. Has some elements of technology, but not in the traditional sense. So more of a steady Eddie player than a Square or one of these buy now, pay later newfangled kind of fintech player. I'm not downplaying or discounting them, but I'm just saying Broadridge isn't that glamorous operator. It has been a steady player in recent years too, and I expect that role to continue. It is currently trading close to its 52-week high, around 180. In my base case, I envision the stock returning around that level in 2022 as well. In a bull case, the odds for which, in my judgment, are about 1/3. It could be up 30 to 35%. The business is very predictable. There is very low risk in how it earns its revenues and earnings. Not a whole lot of capex needs, so as a result, it has a very predictable inflow of cash. And because of that, the predictability, the high visibility, and the stability of its business, it is lower risk and has a lower beta than the market. Pays a dividend, not a huge one, but still about 1.3, 1.4%. Isn't dirt cheap. Currently it trades at around 26, 27 times forward 12 months. That is below its all-time high and about in line with its 5-year median. I would expect the stock to continue the momentum it has been on in recent years and use the strong cash flows that I referred to earlier more to strengthen balance sheet than to return it to shareholders. And there's nothing fundamentally wrong about its balance sheet, but it made a big purchase last year using debt to fund that acquisition, about $2.5 billion worth of of transaction. And the expectation is that the big use for cash in 2022 will be to bring down that leverage to more of the historical level. So all in all, a steady Eddie stock that could play an anchoring role in your portfolio and something that adds to the diversification and the stability of overall returns in your portfolio. Broadridge Financial, ticker BR. With that, I'll pass it on to Ben.
Hello, everybody. Ben Rains here. Today I'm diving into Sonos, which trades under the ticker SONO. Sonos is a speaker company that competes against Bose, Apple, and others in the high-end home audio market. Sonos sells a range of sleek, connected speakers, subwoofers, soundbars, and more. Its baseline speakers start at under $200, and packages can cost over $2,000. Sonos last spring officially entered the popular portable smart speaker space with its new $179 Roam speaker. Its non-speaker business also includes an $8 a month ad-free streaming tier of its music service to help it compete against Spotify. And overall, Sonos is set to continue to benefit from the larger shift to modern connected devices and a broader increase in at-home spending. Sonos revenue climbed 11% in fiscal 2019 and 5% last year. It then posted blowout 2021 results for its period that ended in early October, with sales up 30% and its adjusted earnings skyrocketing. Plus, Sonos has built up a loyal customer base full of repeat buyers. The firm's total households climbed 15% last year to about 12.6 million, and its products per household increased all the way to 3. And Sonos executives raised their 2022 guidance even in the face of global supply chain bottlenecks, with current Zacks consensus estimates calling for Sonos revenue to climb another 14% this year, and then another 12% above that in 2023 to hit $2.2 billion. That said, its adjusted earnings are projected to slip slightly compared to its hard to compete against 2021 before bouncing back in a big way in 2023. That said, its overall 2022 and 2023 consensus earnings estimates have climbed since its release to help it capture a Zacks ranked #1 strong buy right now. And it's now crushed our EPS estimates by an average of 180% in the trailing 4 quarters. On top of that, Sonos executives announced a new stock buyback program in November. And in terms of price performance, Sonos, which went public in 2018, has surged about 90% in the last 2 years. And luckily for investors who might have missed out on that ride, it's only up about 20% in the past year. And it currently hovers about 35% beneath its April records at around $29.30 per share. And its current Zacks consensus price target represents 60% upside to its current levels. Sonos is also trading right near its year-long lows at 22 times forward 12-month earnings, which marks a slight discount even to the S&P 500, and not too much of a premium compared to its industry, which it's easily outperformed over the last 2 years. So therefore, Sonos looks like it might be worth considering as a buy at the moment with its strong Zacks rank and its low price and its ability to keep growing within this nice growing market. And that does it for top stock picks today. Make sure to check out Zacks.com/promo for a look into some of our services, portfolios, and more.